Hey traders! I hope that everyone is doing alright. If you are familiar with Forex trading, you must have heard the London Breakout Strategy. It is well known among day traders. But don't worry if you haven't heard of it, because in today's video, first, I will show you the regular way to trade with the London Breakout Strategy, and then, I will show you two other alternatives that perform better according to my experience. But before we start, please don't forget to like and subscribe for more trading content. It encourages me to upload more videos, and it also helps with the YouTube algorithm. Okay, let's talk about the standard London Breakout Strategy. Actually, the London Breakout Strategy was one of the first strategies I have learned after I started day trading. Like most of you guys, I have learned this strategy from YouTube. Because you can find tons of fake trading gurus that act like it is the best Forex trading strategy in the world. It took me more than 6 months to realize that it was not the most profitable strategy ever. So I wanted to make a video to prevent you from going all in with the classic strategy. As promised, after showing you the original strategy, I will show you two strategies that have higher win rates. Okay, let me show you the classical London Breakout Strategy. We will open tradingview.com as usual. If you don't know how to use the platform, you can check out my previous tutorials about it. Right now, I am looking at the 15-minute chart of the British pound to US dollar chart. The London Breakout Strategy is all about time zones, so we have to add an indicator that will show us the time zones. So, I will click on the indicators icon here, and search for sessions. You can use the one that says, Sessions on Chart. You can click the star icon next to it to add it to your favorites. Now, you can see that our chart is full of colors. It might look complicated at first, but if you look closely, you will notice that there are actually just 3 colors. Those colors represent time zones. Forex markets are categorized into 3 main time zones, the New York session, the London session, and the Tokyo session, which is also known as the Asia session. I have put the time zones on the world map so you can understand better. And now, you can see the zones on the chart. The yellow zone is the Asian session, and as soon as it is over, the London session, which is the green one, starts, and it is followed by the red one, which is the New York session. You can see that they intersect with each other for a couple of candles, but it is not that important, because we will use just the Tokyo and London sessions in our strategy. So, let me explain the logic behind the London Breakout Strategy. As you can understand by its name, the London Breakout Strategy is a breakout strategy. And while using the strategy, traders are trying to benefit from breakouts that are caused by the high volatility of the London session. Well, you might think that the New York session has the highest volume, but actually, it is not true. The London session has the highest volume in Forex markets, and that is why we can see high volatility in the opening of the London session. Let me show you what I mean on an example. You can see that during the Asian session, price tends to move in a range. But as soon as the London session starts, the volume increases, and with a high volume, a breakout is most likely to occur. You can see this scenario in this example. During the Asian session, the price moves inside a range, but as soon as the London session starts, our support level is broken, and the price falls strongly. Before moving to strategies I will show you, let's look at how to trade the standard London Breakout Strategy on a live example. In the usual strategy, you have to draw 2 lines on your chart. One of them will be at the top point that the price touched during the Asian session, and the other one will be at the lowest point. These lines will show us the range that the price moved inside during the Asian session, and after the London session starts, you will look for a breakout. We will open a position at the first candle that closes outside this range. In this example, it will be this candle. For the stop loss point, you have 2 options. You can either put it in the middle of the range, or, you can put it just below the range. And you will aim for a 2 risk-reward ratio. I know that it looks like a decent strategy, because trading breakouts is appealing to most of the traders, because of the big profit potential. We all know that once a support or resistance level is broken, the price tends to move strongly in the same direction as the breakout. But there is a huge catch with this strategy. Breakouts usually turn to be just fakeouts, and the price pivots before you can exit your position. Greedy traders open positions as soon as they see a potential breakout, without a confirmation. But smart traders prefer to fade breakouts. The classical London Breakout Strategy is for traders who try to catch the potential breakouts, while the strategies I will show you are for traders who want to fade breakouts. Let's start with our first strategy. Well, our first strategy is a scalping strategy. Actually, both of the strategies are. So, the first thing we will do is to change the time frame to 5 minutes. Just like the regular London Breakout Strategy, we will just use London and Tokyo sessions. So, I am going to open settings and disable the New York session. Similar to the regular London breakout strategy, we need to draw two lines to show us the range. But there is a small difference. Unlike the regular strategy, we will not determine the range by looking at the full session. We will only check the last 2 hours of the Tokyo session to find a range. Let me show you what I mean with an example. You can see that the London session starts here. So we will only check the last 2 hours of the Tokyo session. Actually, it can be a shorter time frame if you see a range that the price fits. It doesn't have to be exactly 2 hours, it can be between 30 minutes to 2 hours. You can see that the price moves inside the range, and it doesn't break the support or resistance until the London session starts. Instead of two lines, I drew a rectangle this time. You can draw whatever you like as long as it shows you the range. If we were trading the regular breakout strategy, we should have opened a long position here, at the closing of the first candle that closes above the range. But this time we are not trying to catch the breakouts. We are trying to benefit from the greedy traders that opened a position hoping that it is a breakout. So, we are going to do the opposite. As soon as the price returns inside the range, we will start to look for short opportunities. However, we won't open a position until the support level is broken. And once it is broken, we will look for short opportunities. So here in this example, you can see the volatility increases with the opening of the London session. You can see bigger candles. So, I will open a short position once the price drops below the support line. And I will put the stop loss just a little bit above the resistance area. As you can see, we did the opposite of what London breakout strategy told us to do. And, we were still profitable. For the take profit target, according to my backtests, this strategy works better with a smaller risk-reward ratio. You can aim for a risk-reward ratio between 1.3 to 1.5, I usually stick with 1.5 depending on the situation. Let me show you a long example before moving to the other strategy. We will draw a range that the price moves inside in the last hour of the Asian session. You can see that, as soon as the London session starts, the price falls below the range. That means we are going to look for long entries. So after a couple of candles, the price moves back to the range. But we still have to wait until it breaks the upper band of the range. And once it does, we are going to open a long position. You might ask, what is the logic behind this strategy? Well, we are trying to benefit from greedy traders that follow the regular London breakout strategy. You know that traders who trade the regular London breakout strategy open a position as soon as a candle closes outside the range, and guess where their stop losses are? You are right, it is either in the middle of the range or at the upper band. So as soon as their stop loss orders are triggered, volatility will increase and the price will move in our favor. So we are trying to benefit from the volatility that is caused by the stop loss orders that the regular London breakout strategy followers put. But let me warn you, you'll get way fewer signals than the regular London breakout strategy. But you will also get into fewer fakeouts. Okay, now as I promised, I will show you our second strategy. Actually, it is really similar to the first strategy I have shown. We will try to benefit from the fakeouts that occur in the London session again. Just like the previous one, we will use the 5 minutes time frame, and we will use just the London and Asian sessions. I will explain the strategy with examples, and you will see the similarity between strategies really soon. Just like the previous strategy, we will check the last 2 hours of the Tokyo session to find a range. Here you can see the range that the price moves inside, and once the London session starts, volatility increases, and the support level is broken. So novice traders will open a position immediately thinking that it is a breakout. We will try to fade the breakout again. As soon as the price drops below the range, we will set a buy stop at the middle of the range. That means if the price returns back inside the range, our order will be triggered, and we will open a long position. The stop loss will be just a little bit below the range, and the risk-reward ratio will be 2. That means we will try to make 2 times more than we risk. Let's look at another example. You can see that the price moves inside the range at the last hours of the Asian session. But as soon as the London session starts, the price moves below the range. Once we see a candle that closes below the range, we will set a buy stop order at the middle of the range. That means, our long position will be opened if only the price returns to the middle of the range. I want to show you a short setup before finishing the video. In a short setup, we will wait until a candle closes above the range. And as soon as it does, we will put a sell stop order at the middle of the range. Just like the long setup, the stop loss will be just a little bit above the range. And the risk-reward ratio will be 2. I hope that you understood the alternative London breakout strategies better. But if you have any questions, Shoot them up in the comments section. Please don't forget that, I am not saying the regular London breakout strategy cannot be profitable. I am just trying to show you some alternative strategies you can try instead. Please be a smart trader and backtest everything yourself. Don't trust anything you see online without testing it. I wanted to thank all of you guys for your support in recent months. I was so close to quitting YouTube last month, but your amazing comments kept me motivated to continue. You are the reason that this channel is still online, so I will try to upload more often in the future. Please don't hesitate to give me ideas for future video topics. So, please tell me what kind of videos do you want to see on this channel, and I will try to upload content that you are interested in. Have an amazing day.